And now it's time for development debates. We dig deeper into some of the questions shaping the future and present of China. Today, we'll discuss how the U.S. government shutdown will affect Chinese markets. The U.S. government was recently shut down due to division within the House of Representatives between Republicans and Democrats. At the center of the dispute was the issue of Obamacare, also known as the Affordable Care Act. The bill has already been passed into law, but the recent controversial vote was about funding for it. Because the House of Representatives is split 232 to 200 in favor of Republicans, the plans for funding Obamacare favor a Republican perspective. This perspective came in sharp contrast to the view of Democrat-led majority in the Senate, and that of the president, who is also from the Democratic Party. Without an agreement on the budget before its specified deadline, the government was forced to shut down. Many are viewing the Republican members, who are also recognized as members of the Tea Party, and Speaker of the House John Boehner, as the major players in this radical move. Since the U.S. has the largest economy in the world and the most highly traded currency, the global economy saw immediate effects. China has become well known for its position as the largest foreign owner of U.S. government debts. It has invested in over $1.32 trillion in treasury assets. So the value of a dollar and future U.S. economic performance is extremely important, as it affects major Chinese-owned assets. A lot of debate has come up about the possible risks and rewards of having China as a major investor in the U.S. economy. Many of the issues surrounded how China's growth as a military and economic power will affect the influence of the U.S. in its often hegemonic roles. Some conspiracies even address the issue that this was a ploy by the Chinese government to leverage its influence over the U.S. Most economists believe that the Chinese government made the investment because it needed to keep down the value of the renminbi and keep up the U.S.-China trade surplus. And one seemingly simple reasoning is that the U.S. Treasury bond market is the only one big enough and stable enough for the massive amount of foreign capital China had. But since China is relying on stability within the U.S. economy for this massive investment, many are interested in how this shutdown will affect the Chinese government. As much as Tea Party Republicans would like to remove Obamacare, or at least have it completely defunded, there seems to be a global issue with shutting down the government of the world's biggest economy to do so. Eamon Fingleton is a contributor for Forbes. He wrote an article about a quirk in the shutdown titled, "If Republicans want to shut down Washington, they'll have to ask China's permission first." In this article, he talks about how China's investment in treasury bonds gives them a, quote, strong interest in preserving America's basic financial, economic, and social stability. This would mean that the shutdown and failing to meet the debt ceiling is not in their favor, with or without Obamacare. Eamon argues that East Asian countries take a long-term view on investments, so he doesn't believe that they will start dumping their treasury bonds. But his rationale for this was that East Asians hate drawing attention to themselves. However, many in China could easily disagree with this take on the issue. Many have looked at moves by China as extremely attention-grabbing. If attention wasn't something highly valued in China, then terms like mianzi wouldn't be commonly used in descriptions of important cultural behaviors. In fact, there's a laundry list of things China has done that scream attention-grabbing. One would be hosting the Olympics, where every publicly made detail was heavily planned. Another would be the development of its many record-breaking fast trains and construction projects. The most obvious one would be buying up enough U.S. debt to become its second largest foreign investor, surpassing Japan. His argument makes several strange assumptions that border conspiracy theories. One assumption he makes is that the Chinese are wielding their influence behind the scenes to get Wall Street banks to openly oppose the Tea Party. Another assumption that he's making is that Wall Street banks are getting, quote, plenty of face time to advise U.S. government players because of their political donations to both sides. These assumptions are borderline comical in this situation for a number of reasons. One of the most obvious reasons is that, in the case of a default, more than just China and its investment in treasury bonds are at risk. The entire global economy and the U.S. government's credit rating would be affected. Meanwhile, Reuters pointed out the S&P index was up 0.1% on Tuesday during the shutdown. Many investors expect the shutdown to end before the debt ceiling's deadline, if not sooner.